have diversified our gas supplies. We have secured sufficient levels of underground gas storage. We do have companies who are addressing exactly this demand response, and this is a way forward.
I want to make it very clear. The sanctions are here to stay.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Cash in or cash out? Carlyle's David Rubenstein says it's time to buy the dip. Bridgewater's Ray Dalio warns of another 20% plunge in equities. Brace for a hard landing. The 230 Treasury curve hits its most inverted this century. As short-end yields jump, stocks recover after their brutal sell-off. Plus, energy intervention. Now the EU unveils its crisis plan, but shelves ideas of a price cap. The ECB's Holtzman warns inflation is set to accelerate even more. So good morning, everyone. First of all, let's check on the markets because interesting dynamics that we're seeing overall. Stocks pretty much mixed. Again, investors weighing the prospects of large interest rate hikes by the Federal Reserve. Treasury yields actually rising. The dollar pretty much little change. Now, European stocks up in Europe. Banks are outperforming, utilities slumping. So this is the picture for European stocks. If we look at the difference, for example, in the market between countries such as the UK or Italy. I'm so choked up because finally we're seeing some gains across the board. We look at exactly what it means, of course, for ECB hikes as well. Retail sales due in the U.S. today, and the University of Michigan readings tomorrow will, of course, be parsed for clues about the strength of the economy and inflation expectations. So European stocks higher this morning, recovering some ground after the rout. The 230 yield curve, harbinger for a looming recession, meanwhile, has deepened to levels last seen in the year 2000. Now we're joined by Catherine Young, Investment Director at Fidelity International, and Christine Aquino for our markets team. So thank you both for joining us. Christine, what are we looking at away from inflation? There's nothing else really, right? It's all about the strength of the U.S. economy, what it means for the Fed, dollar strength, and the rest of the world.
Absolutely, Francine. I think, yeah, we're biding a little bit of time here before the next key event coming up next week, of course, that Fed rate decision. And then right after that, the Bank of England rate decision, which was delayed a little bit due to the Queen's passing. But it is still very much a conversation about how much more policymakers will really have to do. I think the U.S. inflation numbers really just showed us this week that it's going to take a lot more than what the Fed has already done, and really what a lot of central banks have already done. Because even in the UK, while inflation pulled back a little bit and maybe it was slower than expected, it's still very much near those historic highs, and it just really calls for unprecedented policy response.
Catherine, what's your take on inflation? How aggressive will these interest rate hikes be from the Fed?
Well, even if we see absolute inflation ex-China, sort of reach its peak or meet its inflection point, the central bank policy is still way behind. So it is still a risk, as we've been just discussing. And again, what's very interesting is ex-China, so inflationary pressures aren't as significant in this part of the world.
What does that mean, Catherine, for where you want? Are you buying the dip at the moment, or are there parts of the markets that look attractive?
So in terms of the Chinese market itself, there's so much negative news flow that's been priced in for well over a year, 18 months now. So there are some opportunities. You're finding opportunities across the board. But having said that, we don't think we're going to see this big divergence that we have seen over the year in terms of value versus growth. So it's not like value is going to outperform 10% over growth names, or in 2020, we saw the reverse where growth was outperforming value names. It's going to be more of a mixed bag. But having said that, in this kind of environment, looking for companies with more visible earnings profiles that have that defensive business nature, and all importantly, that dividend yield, are really, really key.
Christine, when you look at some of the concerns out there, so of course it's China, it's one of real estate, do we feel that the policymakers will at this point maybe reverse course and do everything they can to sustain it?
Well, as far as China is concerned, we definitely know that they very much want that supportive policy, right? I mean, there is a reason why I think we're seeing a lot of pushback, for instance, against a weaker yuan. But at the same time, Chinese authorities really emphasizing that support for the economy via other measures. And so there is very much this sense that the Chinese government really wants to kind of see the economy through such a really difficult time. I mean, between lockdowns that have been, they've been in and out of lockdowns. Demand, it really has been slowing to a great degree. We're seeing that getting borne out in the economic data. It really has not been a great year for China.
When you look, Catherine, at some of the concerns surrounding China, I don't know whether geopolitics, of course, it's something that we need to keep a bit more of an eye on, given Vladimir Putin with President Xi today.
These geopolitical issues, especially between the two largest economies in the world, are likely to continue as you see both economies really trying to increase their global market share, especially from a high-end manufacturing perspective. And even from a regulatory perspective, whether it's the ADR issues and the disclosure there or the executive order, you're probably going to still get these periods of volatility. And again, a lot of this is priced in, but in terms of the key areas of risk for China, it's this ongoing impact of the lockdowns on both sentiment as well as productivity. And in terms of just, the other risks, again, slightly different from the rest of the world, but the PBOC or the central can't ease too much because the interest rate differential will just become bigger and bigger as other central banks aggressively tighten.
So, Catherine, what does that mean for renminbi?
Again, you're probably going to see, it's good seeing a depreciating RMB, right, for the exporters, and China continues to be a huge exporter. But then what does it mean from a flows perspective and also from a sentiment perspective? So again, you're probably going to see the PBOC or the regulators really closely look at the range in terms of what the RMB will do. So no massive shifts, but again, it's going to be probably quite range bound.
All right. Thank you so much both for joining us. Christina Kino from our markets team, Catherine Jung, Investment Director at Fidelity International. Now, coming up, could there be limits to a no-limits friendship? Xi and Putin are set to meet for the first time since the Russian president launched his troubled invasion of Ukraine. So we'll have plenty more on that story. And of course, we continue watching some live pictures from Westminster Hall, where Britain's Queen Elizabeth II is lying in state. Thousands and thousands of mourners have been queuing through the night to pay their respects to the monarch. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, as Ukraine makes gains on the battlefield, Russian President Vladimir Putin is facing narrowing options as he seeks to turn the tide in his struggling, nearly 7-month-old invasion. Now, he's unlikely to be thrown a lifeline from Xi Jinping when he meets the Chinese leader in Uzbekistan later. Now, earlier this year, the Chinese leader spoke of there being no limits to their friendship. That statement will soon be put to the test. Now, for more, we're joined by Bloomberg's Bruce Einhorn. Bruce, what does China need from Russia, and what does Russia need from China right now?
Well, Francine, they did announce this no-limits friendship partnership back in February. That was when the two presidents met at the time of the Beijing Olympics. Of course, it was right before the invasion of Ukraine, which has not gone according to the way that Vladimir Putin presumably thought it was going to. So he's going into this meeting with a much weakened hand, much weakened position. China has offered some support, certainly rhetorically. China has supported Russia, has blamed the United States for the war in Ukraine. A top Chinese official recently said that Chinese leaders fully understand the necessity of Putin's actions. Chinese companies have expanded some trade with their Russian counterparts, but you're getting back to the idea of there being no limits to this partnership. Maybe there are some. China has not, as far as Western intelligence has been able to tell, or at least publicly say, offered military support to Russia, hasn't offered significant financial aid. Chinese companies are concerned about getting hit with retaliatory secondary sanctions from the U.S. and the EU and other allies. So China has helped, but probably not nearly as much as Vladimir Putin would have expected at this point.
So in comparison, how, overall, has the situation changed from February?
For Xi Jinping, he's also in a different situation. It's hard to say whether it's stronger or weaker. Certainly, compared to February when the leaders last met, Xi Jinping has had to deal with significant amount of COVID outbreaks in China, including the outbreak in Shanghai, which led to a 2-month shutdown of the city significantly affecting Chinese growth. Xi Jinping has not backed away from the COVID-0 policies. The city of Chengdu in Western China just recently has gone through a lockdown only a few weeks as opposed to a few months, though. So Xi Jinping might be able to point to this as a sign that, look, his zero tolerance strategy for COVID is working. That said, it is taking an impact on the Chinese economy. So a slightly weaker China going into this meeting with Russia, but a significantly weaker Russia going into this meeting.
All right, Bruce, thanks so much. Bruce Einhorn there with the very latest on the meeting between President Xi and Putin. Now we're back with Kaifeng Yung, Investment Director at Fidelity International. Also with us, Christina Kino from our MLive team. Catherine, we were talking a little bit before about China. This, of course, is your expertise. What does this China influence and really the standing up to the U.S. means for their relationship and their economic ties with the emerging markets, neighboring emerging markets to China?
Yeah, I mean, it's critical. And, what happens in China, whether it's policy-wise or growth-wise, does have an impact on its neighbors, which then also has a knock-on impact in terms of emerging markets. So we can't underestimate the influence that China does have from a global perspective. But if we look domestically, and Christina mentioned this as well, what's key from a policy perspective is really to ensure confidence picks up again and to really ensure that the economy is back on track. And what's really fascinating to look at is we all talk about the rise of the Chinese consumer, but what's going to become very important over the future is the rise of the Chinese investor. So looking to see how they invest, especially with the dynamics in the property market. That's why we believe that the development of the capital markets is going to be critical in terms of growth going forward.
Catherine, overall, when you look at the supply chains and how far they've changed because of COVID, do they change further because of energy prices in Europe? Do they move around? I know this is usually, supply chains that take like 5-10 years to move.
Yeah, China, because of its expertise in manufacturing and the infrastructure itself, they really dominate the exporting perspective. And they also import a lot of raw materials. So a lot of the raw material prices is very dependent in terms of the demand coming out of China. In terms of the supply chains, I mean, China continues, even if we look at the lockdown situations, when you do see lockdowns these days, you still see this sort of exemption in terms of productivity and manufacturing. So leisure, restaurants, all that kind of part of society tends to close down, but manufacturing is still able to go ahead. So they are cognizant of the supply chain. But, when I mentioned earlier about the geopolitical nature, as China continues to increase its presence in a number of high-end manufacturing spaces, this is going to see further competition, not just from the US, but other areas such as Europe.
Thank you so much for joining us, Kaifeng Yung, their Investment Director at Fidelity International. Now, we're also joined, of course, by Christina Kino to look at the other things that we're watching out for is really dollar, right? Anything that you have, this dichotomy between the U.S. and China is extremely important. And this inverted yield curve, I don't know how we live through this. I know that the 2-10 is something that we talked about. It's not necessarily impending recession. Then the 3-month 10-year is also ugly.
Yeah, Francine. I mean, that really is kind of the story, right? It has been one of repricing those Fed expectations, which really is more pronounced in the front end of the yield curve, thus the inversion that we're seeing at the moment. But again, when it comes to inverted yield curves, the warning sign really is not so much the inversion in and of itself, but when that curve starts steepening and those borrowing costs across further out in curve start rising as well. That's really when it starts flowing through to the real economy. That's when you start seeing that tightening in financial conditions that really the Fed wants to engineer to be able to kind of bring down the level of inflation that we're seeing at the moment. Of course, whether that causes recession, how much of a hard or soft landing we're going to see on the back of that, that would be the key question for a lot of investors at the moment and still very much up in the air.
What does this all mean for dollar?
Well, the dollar has been on such a relentless stare, but I do note what some of the key developments more recently is really that more pronounced pushback from some of the world's biggest economies, Japan and China, both again showing less of a tolerance now for the weakness in their own currencies and strength in the dollar. Again, we've talked about, what really could stop the dollar in this in its tracks, and it possibly could be something of a concerted effort from the biggest economies in the world pushing back simultaneously against the dollar. It may not be sort of a Plaza Accord type agreement where they're all doing it all at the same time in a coordinated way. UK. But if we do see kind of more of that simultaneous pushback from other countries, apart from China and Japan, we could really see a bit of a turning of the tides here for the dollar.
Because the other thing that we really need to focus a little bit on, I know we have for different reason, is the fact that the Chancellor of the UK seems to want to unleash this like Big Bang 2, right? This like Reagan-style regulation. We hear today also about banker bonuses. Is there, if a currency is a share price of a country, what are we expecting for sterling?
Yeah, well, it's going to be interesting, right? I mean, this pro-growth push, in theory, should be positive for sterling, but I think there are kind of more immediate underlying issues that are weighing on a currency at the moment. Most importantly, of course, what we're about to face this winter. We're in the middle of a cost of living crisis, and more importantly, we're about to face kind of a bit of an energy crisis, as is the rest of Europe at the moment. And so, you know, well and good, I think that the Chancellor is trying to really gear the country toward that growth mindset, that growth perspective. But I think the immediate thing that sterling really has been weighed down by is the fact that consumers aren't doing so well at the moment. We'll see if Liz Truss's plan to cap energy costs for households and businesses, we're going to see more details of that in the coming weeks. We'll see if that kind of shores confidence enough among UK consumers that into next year, this growth sort of perspective really comes through.
Christine, thanks so much. Christine Aquino there from our markets team. Coming up, Europe's rate setters double down on their pledge to drive down inflation as Europe braces for further energy price pain this winter. We'll get into that with former ECB President Jean-Claude Trichet. That interview coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Virginia Governor Republican Glenn Youngkin says Biden's policies are leading to persistent inflation. Take a listen.
I am really concerned about the inflationary policies that we see coming out of the Biden administration. And Tom, we see the ramifications of that yesterday, which is anybody who thought that this was going to be short-lived has been shaken, because what we're seeing is the persistent result of bad policies, inflationary policies, with grocery prices up, fuel prices up, and Virginians and Americans feeling it in their wallet, and they're having to make compromises as a result.
We have iconic American companies moving, for instance, from Chicago to Greater Washington, D.C., translated Virginia. We've got entrepreneurial companies such as your announcement today on an innovative company. And on a wage basis, they're competing with Amazon, who's lifting compensation for drivers in hundreds of thousands of their employees. Is there a wage spiral in Virginia?
Well, there is a real wage inflation challenge. These wages are growing, but they're not growing as fast as inflation and the cost of living. I'm really excited about these new companies that are coming, like Plenty Unlimited, that we're announcing today, that is going to build the largest indoor growing facility in the world. And we're going to see them right here in Virginia. They're going to compete for talent. This is why we have to get people back into the labor force. We've seen labor participation drop substantially in Virginia. We were up near 67% prior to the pandemic. And unfortunately, we dropped and we're in the 63.5%-ish now. We got to get people back to work. These great jobs, these next generation kinds of opportunities will pull people back into the workforce, but we've got to stop all of the underpinnings that have encouraged them to stay home and out of the workforce and get them back to work.
Governor, this indoor vertical farming company and the indoor vertical farm that you're espousing really speaks to an agenda more commonly associated with the Democrats in terms of trying to make things greener, make things more modern with respect to the carbon footprint. Do you find yourself bumping up against that stereotype when trying to have a more modern approach that brings in more young workers?
Well, not really. I mean, agriculture is Virginia's largest private industry, and technology is one of our fastest growing sectors. And so to bring agriculture and technology together in the Commonwealth of Virginia makes perfect sense. And in fact, we have absolutely become the hub. With today's announcement with Plenty, which is going to build a $300 million facility right outside of Richmond, 300 new jobs, and our announcement 2 days ago with AeroFarm, we will have the first and second largest indoor growing facilities in Virginia. And yesterday we announced another company, Beanstalk, expanding their facilities. So we're bringing together our agriculture roots, our technology future, and forging the way for an industry of the future. Ag tech uses far less natural resources, has higher yields, and a great product. And I just think this is part of the future of agriculture. It's happening right here in Virginia.
Well, that was the Virginia Governor, Republican Glenn Youngkin. Coming up, Europe's rate setters double down on their pledge to drive down inflation as Europe braces for further energy price pain this winter. We'll get into all of this with the former ECB President, Jean-Claude Trichet. That interview next. Cash in or cash out? Carlyle's David Rubenstein says it's time to buy the dip. Bridgewater's Ray Dalio warns of another 20% plunge in equities. Brace for a hard landing. The 230 Treasury curve hits its most inverted this century as short-end yields jump. Stocks recover after their brutal sell-off. Plus, energy intervention. The EU unveils its crisis plan but shelves ideas of a price cap. The ECB's Holtzman warns inflation is set to accelerate even more. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Europe is grappling with a crippling energy crisis and scorching inflation that continues to pose a problem for the ECB. Central bank officials are doubling down on their intention to fight inflation. Now, while François Villeroy de Galhau thinks the ECB needs to focus on hitting the neutral rate, near 2%, and then assess, Chief Economist Philip Lane signals further hikes will be smaller after last week's jumbo move. Now, let's get through the thoughts of former ECB President Jean-Claude Trichet. Mr. Trichet, as always, thank you so much for joining us. I have many questions, first of all, on how impossible or difficult it is to find a neutral rate, how difficult it is to deal with the second and third round of inflation effects, of course, of this energy crisis. What do you see the most difficult set of data that the ECB has to analyze right now?
I think that the ECB is very, very clearly concentrating on inflation expectations and the anchoring of inflation medium-term expectations. I would say the moment where you have to stop increasing rates is the moment where you clearly have regained control of the inflation expectations. And of course, neither on this side of the Atlantic nor in the US, you know in advance exactly at which moment and at which level you will be in that situation. That's the reason why, when asked the question you just asked me, the response of the central banks is, we will see. In any case, we are on our way to regain control, and I trust that they will regain control of expectations.
But, Mr. Trichet, how difficult? This is a supply-side shock. We're essentially at war with another nation that holds so much energy. Does this show us really the limited scope of any central bank?
I think that what you have to look at very, very clearly is more the underlying inflation, the core inflation, than the apparent inflation, all taken into account, including oil and gas and agro products. And clearly there you have a level which is very, very worrying. On both sides of the Atlantic, again, you have more than 6% on the one hand in the US, 5.5, around 5.5 in continental Europe, in the euro area. And that, of course, signals a level of inflation without oil, without gas, without the agro product. That is something which signals a high level of inflation. So you have to concentrate, and it is, in my opinion, what the ECB is doing, on avoiding the second round inflation, the second round price increases, which contaminate the full body of the constellation of prices. And they concentrate on that, and they have to be very credible to regain control of this very, very important, I would say, second round that are there already, unfortunately.
But, Mr. Trichet, are we looking at stagflation in Europe? And again, is this worst-case scenario, like nightmare scenario for any central bank?
Well, again, I take it that the worst scenario is very clear. You lose control of inflation, you're back to, say, the Fed in the 70s and the beginning of the 80s, and you have to regain control in the worst possible circumstances. You have to put rates like Paul Volcker did at 20% to regain control, to break the back of inflation. So it is what the ECB is trying to avoid, of course, and to avoid the worst. So even if there is a period of time where you have some kind of slowing down of growth, which is in the cards, obviously, then you still have to avoid the second round effects. You still have to regain control of inflation expectations. I think we should not mix the two. In any case, the banks are doing what they should do in the present circumstances, taking into account, of course, the level of inflation. You also to take into account, in any case, if you take the real rates, of course, you have still on both sides of the Atlantic real rates on a short-term basis that are negative, on a medium-term basis that are very close to negative, and also, and not on the long-term basis, because I make the assumption that 2% will be, around 2%, say, will be the right inflation in the medium-long term.
Yeah. But Mr. Trichet, so how aggressively and how fast do rates have to increase in the Eurozone to make sure that actually we break inflation's back before things are out of control in the Volcker style?
Well, again, as you might remember, they had anticipated 25 basis points when in July. They did 50. The market and many observers had anticipated 50, and they did 75 in the last decision. We will see what happens. In any case, again, the problem is regain control of inflation expectations and still understand that starting from zero remember, the interest rates were minus 50 basis points before July. After July, it was zero. And now it is 75 basis points. So in any case, we are still at a low level. So we will see. I make no, I would say, projections at all, and I have no advice for the ECB. I would only say it's clear. Regain control of inflation expectations is the rule of the game.
Do you worry about many companies actually having to go bust? So if not zombie companies, when there is such a rapid progress in interest rates, sure from a low level, but in a very short time space, will companies have to go bust?
Again, on a short-term basis, the interest rates are still negative, if I may, and we are still in a universe which is a universe of accommodation. At least, certainly on both sides of the Atlantic. Now, I would also note, if you permit me, that on both sides of the Atlantic, the goal is to, I would say, anchor inflation expectations at around 2%. And that is very important because all central banks of the major advanced economies, those central banks that are issuing the currency that are in the basket of the SDR have the same definition of price stability, the same goal, 2%. Mm-hmm. It was decided upon after Lehman Brothers crisis. And it is, in my opinion, the most important de facto reform of the international monetary system since the Bretton Woods explosion. I insist on that, I stress that. 2% in Japan, 2% in the US, 2% in the ECB, and 2% in London.
Should that go up? Should we change the inflation target because of what we're living through?
I would guard all of us against that. At times, I had some academics claiming that 4% would be much better than 2%. Then you had academics and observers saying 0% would be much better, or 1% would be much better. I am fully encouraged by the fact that all central banks, and not only on both sides of the Atlantic, have reaffirmed very clearly that their anchoring of inflation expectations was 2%. It seems to me that in a world which is extremely turbulent, extremely dangerous, full of uncertainties, the fact that the central banks appear as solid anchor of expectations, which they did in Lehman Brothers and after Lehman Brothers, which they did even in this dramatic period of inflationary absence, total inflation absence, and I would say materialization of the deflation being very present. They maintained the 2%. And now, again, they maintain the 2%. I think they are right, and they are unanimous to do that.
Monsieur Trichet, talk to me a little bit about currency. So we saw some pretty wild swings for euro. What do these current currency dynamics with euro and dollar tell us about the state of the world?
I'm sorry, because I'm not sure I heard the question totally. You are speaking of currency. Is it the exchange?
Yeah.
No?
Yeah, the exchange between how should the central bank worry and look at euro?
Oh, yeah. Well, again, as you know, and as is repeated by François Villerat-Gallo, by all central banks, governor, by Christine Lagarde, they have no objective as regards the exchange rate. And I had no objective in my time. Mario Draghi had no objective in his time. Still, of course, you have to take all parameters when you take a decision. And it's clear that if your currency is very low, you are importing inflation, whether you like it or not. And the reverse, of course, when you are in the opposite position. So I would say, of course, we are not at all at the very low level that we had at times in the euro-dollar relationship. There has been a lot of fluctuation from 0.83 at a time. And I had experienced myself that when I was member of the governing council of the ECB, up to 1.55 or something. So big variation. So I will not dramatize the present relationship between the euro and the dollar, but of course it is taken into account by the governing council when they take their decision, because it's part of the overall parameters that are essential for judging what is likely to be inflation, all taken into account. But again, there is no, in my understanding, no goal.
Monsieur Trichet, we also heard, of course, we have a new Prime Minister here in the UK, Liz Truss. She was very controversial about central bank independence, that we should no longer go on as business as usual for the Bank of England. Your thoughts?
I think that the central bank independence is absolutely key. Again, in a world which is full of extremely hectic potential behavior, full of risks, full of uncertainties, to have an institution which can be the anchor of stability, the anchor of expectation, is decisive. And so it is essential, in my opinion, that the new UK government joins the consensus that we observe on this side of the Atlantic, on the other side of the Atlantic, and has been reaffirmed, if I may, during the last meeting between President Biden and Jay Powell. So we have something which is strong, which is solid, which is experienced since quite a lot of period of time. And again, it seems to me that the UK, I am confident that the UK executive branch will join in.
Thank you so much, Mr. Jean-Claude Trichet, the former ECB President. A pleasure, as always, to have your thoughts, of course, on monetary policy and inflation. Coming up, the merge crypto markets are braced for an upgrade for the history books. We'll look at the context. This is Bloomberg. Now we're showing you live pictures from Westminster Hall, I think, where Britain's Queen Elizabeth II is lying in state. We've been covering, of course, as people and thousands of people actually queue to pay their respects to the monarch. We'll keep a very close eye on that. We also keep a close eye on the markets. The markets overall pretty much steady after the 2 difficult days that we had. Also, crypto's most important commercial highway, Ethereum, just got revamped. According to its co-founder, Vitalik Buterin, the blockchain network has now completed the crypto's most most ambitious change to date? Well, we're now joined by James Butterfill, Head of Research at Coinshares. James, great to speak to you, because I think last time you were in a banking job, right? And then now you're kind of like crypto. How excited are you about this change and the fact that they're becoming greener?
This is massive. I mean, Ethereum has been trying to shift to a proof-of-stake protocol for many years. What's very important for cryptocurrencies is that they have a large network, and a proof of work where they mine is a good way. It provides an economic incentive to build a network. Now it's done that, and it's shifting to this proof of stake where it stops mining. It will offer now a 5% yield. So far with the merge, which happened at 7:40 this morning, everything looks to be progressing well.
Yeah, I love the fact that we call it the merge. It's suddenly like that, you know, they've taken over this term that we used to use all the time. So what are the proof of systems for? Is there an understanding, like how much percentage-wise of the population actually understand what this means? And if you think it's a small percentage, can you explain it to everyone? Yeah,
the proof of systems, it's a large decentralized network, and you need people to validate it and then have an incentive to validate it. It's easy and simple in a proof of work where you mine. In a proof of stake concept, it's a lot harder. So the idea is you issue a yield, you print more Ethereum essentially to issue a yield. But what's very interesting about this, it's been very technically complex, is on the flip side, they are burning an element of yield. So it will be the first cryptocurrency where you see a net issuance of either neutral or slightly negative. So it's a deflationary cryptocurrency.
But so, I mean, there are pros and cons. So what is the number one drawback to this?
The main problem, I think, is political or regulatory interference. With Bitcoin, there is no leader to subpoena. But here with Ethereum, we have the Ethereum Foundation, and they can be subpoenaed, and that could influence it. But it's unlikely. It looks like now, where they're much more environmentally friendly, they will reduce world energy costs by 0.2%. So it looks like there'll be a much more politically friendly opinion towards.
Does it make it more vulnerable, or what are some of the vulnerabilities, though?
Yeah, some of the vulnerabilities are that there could be some sort of political attack. It's less decentralized, so theoretically you could see a much larger stakeholder, a 51% attack, so to speak. At the moment, though, we're seeing there's 420,000 validators on Ethereum proof of stake, so it seems highly unlikely that will occur.
Just so we understand, I mean, there's not, the user experience doesn't really change because of this.
That's absolutely right. I mean, we've not really seen the price flinch since it's happened, and a lot of investment products that are associated with ours, there'll be no real change to those.
So what will this mean for proof of work blockchain?
If
it's successful.
Well, this is Bitcoin, this is proof of stake, but proof of work blockchain, so there is potentially an offshoot here, proof of work. So some miners could carry on mining a different chain, they fork off. Appetite looks very low for it at the moment. There are only 2 developers running this new network. So I don't think it's really going to go anywhere, but a few people are pontificating about it.
I mean, what does it mean for Bitcoin? This is something that we keep on getting asked.
Yeah, I mean, people talk about the flippening, where people start to see that Ethereum's much more attractive. I think they're 2 very different assets, and the market is starting to realize that. Ethereum is a bit like Amazon Web Services, but with a currency rolled into it, whereas Bitcoin is much more some sort of money. It's a stateless asset, more of a store of value in that respect.
Yeah, so you don't see it merge. I mean, you don't see a move from one to the other just because also we cover it so much?
No, I mean, when we see inflows into our investment products, we tend to see them rise inflows in tandem. So investors aren't necessarily saying, oh, it's one or the other.
James, who does your research go to? So I find it fascinating that we have seen a move of at least interest or appetite to understanding from maybe some of the big investors, but unclear to me if they then use it in practical terms. Yeah,
so I say our main audience is institutional investors now. And a lot of our role, I think, is education, helping people understand crypto assets, the difference between them, the concepts behind them. It's a big learning curve for many investors. Don't forget, this is a brand new asset class. It's only been around 13 years. We're witnessing the birth of a new asset class. How often do you see that in your investment career? And this is so fascinating for us.
Thank you so much, James Butterfill there, Head of Research at Coinshares, with some very good, important, but also simple analysis. Much needed, James. Thank you so much for coming signing on. Coming up, we'll continue to cover the day's events in the coming hours, including, of course, the UK's period of mourning, where currently the Queen is lying in state as thousands and thousands queue to pay their respects. More to come on this. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is considering scrapping a cap on banker bonuses, a controversial move that underlines the new government's determination to introduce major post-Brexit reforms. The financial services. The new Chancellor, Kwasi Kwarteng, is said to believe the change would make the City of London even more attractive. The cap was introduced by the EU in the wake of the 2008 financial crisis. Now, in the US, talks aimed at averting a US rail system shutdown have continued into the early morning. About 125,000 workers could strike if there is no agreement tomorrow. US Labour Secretary Marty Walsh is leading the negotiations between unions and freight rail companies. Amtrak says all long-distance trains are currently cancelled. The Chinese megacity of Chengdu is allowing most residents to leave their homes, largely dismantling a 2-week lockdown as COVID cases do decline. People who have tested negative in the previous 24 hours will be allowed to return to work, while transport hubs and supermarkets will reopen. South Korea's top trade negotiator says Seoul and the US are stepping up efforts to resolve a dispute over electric vehicle subsidies as they seek a closer supply chain cooperation. In an exclusive interview, Trade Minister Ann Dugan told Bloomberg the two sides will begin talks tomorrow.
Fortunately, the U.S. government sincerely engaged with us to solve this problem. I agreed with the Ambassador Tai in the USTR to establish bilateral engagement channel, and the working level discussion will start actually this Friday.
And the founder of clothing company Patagonia is giving away the company. The entrepreneur has transferred the ownership, valued at about $3 billion, to a specially designed trust and non-profit organization. The report says all of the company's profits will now be used to fight climate change and also boost conservation. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz are in New York. Anna Edwards here in London, and this is Bloomberg.
In the grand scheme of things, the Fed strategy and the domestic inflation story here dominates.
Companies and industry, they want long-term contracts.
We're in an environment shaped by supply constraint.
Supply challenges are only going to get worse if we're not able to quickly and efficiently move product across the United States from our plants and also from our ports.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The clock's ticking. Negotiations to avert a nationwide rail strike in the U.S. continued overnight. The deadline is approaching. Which billionaire do you believe? Ray Dalio says that interest rates at 4.5% could cause stocks to plummet. But David Rubenstein says it's a good time for investors to jump back into equities. And crypto's most important highway just got a major upgrade. We will tell you what changes to Ethereum mean for investors. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, we have to focus on railroads and logistics concerns leading into energy concerns when it comes to the United States today. Also focused on U.S. data.
Yeah, it's just another potential supply chain headache, Anna, and it could wreak havoc on the U.S. economy. So we're going to have an update on that in just a moment. Let's first, though, get get an update on the markets. It was a mixed day in Asia overall. You had stocks higher in Japan and Hong Kong, but down in China. All of that adding up to an MSCI Asia Pacific index lower by about 0.25% on the day. And I said stocks broadly were down in China, but there was one group that actually outperformed. An index of developers in China rallying about 3 percentage points on reports of a ramped up effort on the part of officials to halt the slump in the housing market. And of course, Chinese officials also would like to halt the slump in the Chinese yuan. You had draining of liquidity from the banking system for a second month announced overnight. They also left rates on hold, trying to lend some support for the currency. And yet the dollar strengthening against the yuan once again today. We are very, very close to that closely watched 7-figure. Right now it's 698.69. And all this talk of verbal intervention or maybe outright intervention in the Japanese yen also not giving a lift to that currency. The yen, too, weaker against the dollar this morning, trading at 143.44, Matt.
All right, in terms of U.S. futures, Kailey, we're looking at not a lot of movement here today. Really unchanged after we didn't get much movement by the close of trading yesterday either. So after that big plunge that we saw on Tuesday, markets have been really in a holding pattern. The same is true for the 10-year yield, still at 345, 344.51 right now. So it's coming up about 4 basis points, but it's still holding in the same range that we saw it jump up to on Tuesday after that inflation print. NYMEX crude right now at 88.68 a barrel, so also only moving about 18 cents, 21 cents a barrel this morning. And Bitcoin also stuck at $20,000 even after the merge. News that the merge was completed. Of course, that affects Ether, but directly, but indirectly, it affects all of the crypto currencies. And you haven't seen much reaction at all in terms of really Ether or Bitcoin this morning. Anna, what do you see in terms of Europe?
Yeah, that seemed to go smoothly. We'll get further analysis on the crypto front later, won't we, Matt? In Europe, then, we are, as you said, in limbo, really, in terms of risk appetite. So stocks in Europe, either side of the flat line, a bit of weakness coming through in Paris and in Copenhagen. But the Spanish market doing pretty well. The UK market up by around 0.5%. If we have a look at what's driving that, the banking sector doing pretty well. And so as we see yields going higher, and I've got the French 5-year yield to illustrate that, but I could have illustrated it with lots of other bond market products. And the move's not dramatic this morning, but it's the sort of it's part of a theme, isn't it? As those yields are going higher, we are seeing the banking sector respond up by 1.7% for banking stocks here in Europe today, especially the Spanish banks. They seem to be doing pretty well. Shell also on the rise, the energy company up by 0.5%. Ben Van Beurden, we've had it confirmed today, is going to be leaving the business. He's been there for decades, of course. Most latterly a CEO, he helped to build up the gas business at that company, and it is the head of the gas unit that is going to be taking over, and that's not being seen as much of a surprise by the analysts who follow the company. Talking of gas, this is a natural gas price here in Europe, up by 7.4%. So we were below 200 euros a megawatt hour for some time, now ticking back up towards the low 230s or into the low to mid 230s. Is there some doubt creeping in about what Europe can achieve here? They've put on the sidelines that talk of a cap on gas prices. They are doing other things, trying to drive down demand. Whether we can get agreement across Europe is a key question, of course, Kailey, as we head towards the winter.
Absolutely, and we're going to have more on the EU's energy crisis through the lens of Italy as well later on this program. As for what's ahead later on today, Chinese President Xi Jinping and Russian President Vladimir Putin will be holding their first in-person meeting since Russia invaded Ukraine. And U.S. Treasury Secretary Janet Yellen will deliver remarks from Maryland to talk tax code changes from the Inflation Reduction Act. And finally, we'll get some more economic data, U.S. retail sales crossing the wire at 8:30 a.m. New York time, Matt.
All right, definitely paying attention to that. But the most important economic data is going to come out of talks aimed at averting a U.S. rail system shutdown. They continued early into this morning. No word if there's been any progress yet. About 125,000 workers could strike Friday if there's no agreement. And if they do, that will jam up goods across the country after we've already had such a horrible supply chain hit. Bloomberg's Kriti Gupta joins us now from Jersey City near Greenville Yard to unpack the details of this issue. So what do we know about the talks, Kriti?
So we don't. What we don't know is really where the developments are. We know, of course, that the core of the issue is not even wage increases. At the core of the issue, it's really access to sick leave, medical leave. Matt, this is really a legacy of the pandemic here. The railroad workers are the backbone of the American economy to some extent. 30% of the entire country's cargo goes through rail, goes through freight. So naturally, they are working long hours, 12-hour days. But during the pandemic, what ended up happening was so many people left the workforce that they had to create a new system that meant you are now on call 90 minutes to 2 hours with 2 hours notice of advance notice, I should say. And then if you don't make it, you are starting to be deducted. You're getting penalized even for things like sick leave, even like for things like anticipated events that you need to take time off for. And that's really what's at the heart of the issue. The labor negotiations, well, they're talking about a 24% increase. They're talking about back pay. But at the end of the day, that's really not what these workers are most concerned about.
Well, Creedy, on the subject of those negotiations, we just had a breaking headline crossing the Bloomberg terminal. The U.S. Department of Labor saying that the rail companies and union have come to a tentative pact. I guess the operating word there is tentative. So we'll see if that holds, what the details of that look like, if it ultimately will get approved by the labor side of things. Can you just talk to us about the industries in the line of fire here that could be most effective should an ultimate pact not actually come through?
Yeah, and the headline there, Kailey, is really crucial, and simply that there is historical precedent for this, that there have been tentative labor agreements, but at the end of the day, Congress has historically had to impose those agreements on unions that tend to walk away. When it comes to the industries, Kailey, it goes from autos to retail. Think about it, all the new vehicles, all the auto parts, they are indeed transported through freight. It's the most efficient way. Think about it from Mexico. Think about oil coming from Canada, refined products, ethanol going to refineries. All of that is going to be put on hold, including commuting. We know from yesterday that Amtrak has canceled their long-distance rail service, but it also comes to closer commuting, domestic commuting. Chicago, the rail system, already warning that they might not actually be able to have their local railway system, Metra, actually in full service. Same with Minneapolis, San Francisco. This is becoming a nationwide issue that could literally put the entire economy on halt.
All right, Bloomberg's Creedy Gupta reporting from the field. She will be there in Jersey City near Greenfield Yard throughout the day, so look for her updates. Let's get the view from Washington now. Jack Fitzpatrick, Bloomberg government reporter, is joining us now from D.C. So, Jack, just to reiterate the breaking news we just received, the Department of Labor saying that the rail companies and union have reached a tentative agreement. How difficult have these negotiations been on the side of the Biden administration?
Pretty difficult. It's a high-profile decision to have the Labor Secretary, Marty Walsh, play a key role to try to get an agreement. And it shows that it was difficult, especially following up with the Labor Secretary after the President's Emergency Board's recommendations did not seem to move things forward. There was a question yesterday as to whether Congress would and had the willpower to require both sides to agree to the outline from the President's Emergency Board. It did not look like there was support for that. There were a couple Senate Republicans who tried to bring that measure up on the Senate floor, and it was blocked by Bernie Sanders. So there were very fundamental questions about how exactly this was going to move forward. Marty Walsh clearly has taken a prime role in moving that ahead. If this tentative deal sticks, then that's a huge sign. But it was something that clearly the administration was struggling with right up until this deadline coming up tonight.
Jack, let's pivot to something that is developing on the geopolitical front more than 6,000 miles away from Washington. The leaders of Russia and China meet today in Uzbekistan for the first time since the invasion of Ukraine. Shortly before the attack in February, Vladimir Putin and Xi Jinping declared, of course, no limits to their friendship. Still, after suffering humiliating losses on the battlefield, President Putin shouldn't expect much help from Xi, we understand. China has resisted sending military supplies or financial support. Jack, how might President Biden view this meeting? Very symbolic, but with reduced expectations about what support will come from one to the other.
Yeah, the Biden administration has tried to keep key players like China away from a formal role in helping Russia. They've been sort of verbally supportive at times of Russia's invasion of Ukraine, but the key question from the Biden administration is, would there be military aid? Would there be more significant economic aid from China to Russia? It does seem to be something that will come up at this meeting. A Putin aide has told the TASS news agency in Russia that they expect both Ukraine and Taiwan to be discussed in the meeting. So it's not something they're going to ignore. But again, the Biden administration and really on a bipartisan basis in the U.S., there's the hope that China would not take any concrete steps forward that would provide significant aid to Russia.
All right, Jack, thanks so much for joining us. Jack Fitzpatrick there of Bloomberg Government talking to us about the breaking news on the agreement reached for rail workers, as well as the meeting between Putin and Xi. Now let's get to crypto. The most important commercial highway, Ethereum, just got repaved, so to speak. The blockchain network completed the crypto world's biggest and most ambitious software upgrade to date. It's known as the merge. You've probably heard about it a lot, and you very likely have no idea what it means. Well, it doesn't matter. It should make things more less energy intensive and greener. Shonali Bassick, our global finance correspondent, joins us now for more. So we've got the merge completed. What's the next step?
I think a lot of confusion here is that the merge is just one step in a series of software upgrades for Ethereum. So the idea here that this would immediately improve transactions and improve gas fees, which is really those transaction costs, that doesn't really come at scale until later on in the upgrades, which come in 2023 and even 2024, assuming that those also go correctly. But it is a really pivotal moment. This was the biggest software upgrade seen in the space, and it moves over to a system that is less reliant on those miners to validate transactions and more reliant on that proof of stake that everyone is talking about, the way to validate transactions through a community putting more of their ether at stake. It changes the economics of the system. You have Vitalik Buterin, a co-founder, really taking to Twitter to really explain what's going on and show the effects of it. And he is saying that there is some performance that is being improved on the network, particularly that can move towards ultimate goals of improving gas fees and that ultimate goal for Ethereum, which is making it more scalable, making it more secure, and making it
gas
more.
Fees. Anna, gas fees will be improved. Aren't you relieved?
Excellent. Well, happy merge to all, so says the Ethereum co-founder. So, happy merge if you're celebrating. We've dealt with what happens in the sort of short term then, Shonali. And as Matt was saying earlier, the market seems to be taking it quite smoothly, which no doubt will be well received by those involved. But what are longer term concerns surrounding this switch?
It's a great question, and I think you see some muted reaction today because today is not over. We know that the merge has happened, but one of the big concerns around the merge is potential scammers, people creating essentially forks or things that look like the Ethereum new network, if you will, that will attract customers to their own Ethereum fork. So that is one big concern today. You also have a lot of concerns in the longer term because staking is something that regulators are taking a look at. So you have exchanges like Coinbase getting into it, but other exchanges, FTX, for example, that hasn't really taken this on as a business. So if staking doesn't become a bigger business among the exchanges and other companies that really are the highway to getting more customers into crypto, then there's a lot of questions around how much staking can be done, how much can it be done at scale, and how much can it really improve the access to more people in this community? Is staking another yield product like we've seen in so many other crypto products that have gotten into trouble or that require more regulatory oversight? It's a huge open question, Anna, and it's something that until there's more clarity can really be a question around the system.
All right, our merge correspondent, Bloomberg Shonali Bassick, thank you so much. And we'll have more on the merge later this hour with Justin Drake, researcher at Ethereum. And of course, make sure to tune into Bloomberg Crypto every Tuesday at 1 p.m. New York time. We cannot talk about this stuff enough. I do want to talk, though, about the breaking news we received just moments ago. The U.S. Department of Labor saying that rail companies and unions have reached a tentative agreement. President Biden releasing a statement a few moments ago saying that the tentative agreement reached is a win for tens of thousands of rail workers who will get better pay, improved working conditions, peace of mind around healthcare costs. He also calls it a victory for railway companies. And he says for the American people, the hard work done to reach this agreement means that our economy can avert the significant damage any shutdown would have brought. So again, a tentative pact reached between rail companies and the union. We'll continue to update you on this breaking news. But we also want to update you on some stocks moving in pre-market trading here in the U.S. I want to begin with Danaher, the big conglomerate. It announced yesterday that it's going to spin off its unit that does things like test water quality and also package design, really trying to narrow its focus to science and health. Investors seem to like it, with the stock up about 4.4%. Another stock moving higher is Netflix. Now, it was also higher yesterday after a Wall Street Journal report that the company is projecting 40 million subscribers on its ad-supported streaming service by the third quarter of 2023. But then you also had an upgrade for the stock over at Evercore, so that giving another lift to it this morning, up about 2%. One stock moving to the downside, though, is NextEra Energy. This is after it announced after the bell yesterday an offering of about $2 billion worth of stock and debt units. So that stock down about 3.6% before the bell, Anna.
Coming up on the program then, Kailey, we will talk to Anika Gupta, Research Director at Wisdom Tree. What does she make of strike activity in Western economies, and how disruptive is that going to be? We'll also get her investment outlook. And a Chinese spy tried to steal GE's secrets. Instead, he got caught by the US and gave the world an unprecedented glimpse into China's espionage apparatus. You can read all about it at Bloomberg.com or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London. Now, Ray Dalio came out with a gloomy prediction for stocks and the economy as well after hotter than expected inflation that we saw on Tuesday. He said, quote, "It looks like interest rates will have to rise a lot. This will bring private sector credit growth down, which will bring private sector spending and hence the economy down with it." He thinks that stocks are going to fall 20% if rates rise to his prediction, the high end of 4.5% to 6% range. On the other hand, Carlyle founder David Rubenstein said it's a good time for investors to jump back into stocks. He said, quote, "When markets are in trouble, as they are now, you could argue now is probably a pretty good time to invest." Joining us to give us her take is Anika Gupta, Wisdom Tree Research Director. So you've got two big, brilliant minds on opposite sides of the trade here, Anika. Do we have further room to go in terms of the downturn in stocks, or is now the time to be buying?
Morning, Matt. Well, it really depends on the time horizon that you have for your investment profile. If you're looking long term, then yes, I would agree with Ray Dalio. But if you're looking for a medium to short term trade, then I think you need to be a lot more cautious because there's a lot of uncertainty lingering around in the horizon.
So just to be clear, Dalio says stocks will fall 20% more from here. You think that makes sense?
Well, I think we definitely have further downside. I wouldn't say it would be as sharp as 20%. Given the fact that we have each of the economies globally going through very different circumstances and very different economic narratives in each of these economies. So I think on the whole, we are in for further downside given the uncertainty into year end. But I wouldn't say that it would be as sharp as 20%.
Anika, good to see you. So it seems the market is leaning towards expecting 75 basis points of hikes from the Fed this time around, rather than 100, although 100, as we said yesterday, remains a point of discussion. What would it mean to markets, do you think, if we saw a hike of 100 basis points, a whole percentage point?
Morning, Anna. You're right. 100 basis points is still on the table. Given the recent CPI report that we've seen, it did come as quite a surprise, given that there was a broad-based increase across all measures. But the reality is, over the long term, that the direction for CPI is showing signs of peaking. And given that narrative, we do expect the Fed to remain on a hawkish cycle, but we don't expect a rate hike as aggressive as 100 basis points. I think the important thing to keep in mind is sure, a 100 basis point rate hike would definitely be a big shock to the market. But the important thing to keep in mind, and that's something that everyone is aware of, is that we do need to see, the neutral rate come up to the 4% level, and that would be staged, across the next 3 meetings that we see. So I don't think the Fed is going to go and push the market in that one direction and shock the market.
Well, Anika, you talked about the upside surprise on CPI, but we also got PPI data yesterday, which is what ultimately matters to companies in terms of margin. How are you thinking about inflation as it relates to that earnings story?
Well, Kailey, you brought up a very good point. We are going to see company profits and margins being squeezed by the higher inflationary impact. On one angle, you also have the stronger dollar in the U.S., which is going to squeeze margins, given its global footprint. And at the same time, you're seeing demand beginning to wane. Today, we have the important U.S. retail sales print. And again, there we're likely to see a slight decline take place, which is pretty much on the back of that constraint being seen by the 10.6 plunge in gasoline prices. So I think overall, our view is that we are likely to see margins decline. Earnings revisions ratio in the US is still fairly stable when you compare that to Europe, China, emerging markets, which are showing a decline. Japan is still holding up pretty well. So I think it's these two economies that are providing a greater margin of safety compared to the other economies globally.
All right, Anika Gupta, Wisdom Tree Research Director, thank you so much for joining us. Now, keeping you up to date with news from around the world, here's the first word. Back to that breaking news, a potentially crippling nationwide railroad strike in the U.S. has been averted. The Labor Department says that rail companies and union negotiators have reached a tentative agreement that, quote, balances needs of workers, businesses, and the nation's economy. About 125,000 rail workers had threatened to go on strike on Friday. There are fewer options for Russia's President Vladimir Putin in Ukraine after humiliating setbacks on the battlefield. Russia is plagued by a shortage of troops, low morale, and what the U.S. calls a shift in momentum. Still, the Kremlin appears determined to keep escalating the fight, stepping up strikes on Ukraine's infrastructure deep behind the lines. The British government may do away with a cap on banker bonuses. It's a controversial move that underlines the new government's determination to introduce major post-Brexit reforms in the City of London. The EU imposed the cap after the 2008 financial crisis. It limits bankers' bonuses to 2 times their salary. And Bloomberg Business Week is out with its annual ranking of the world's best business schools. Once again, Stanford tops the list in the U.S. Chicago and Harvard tied for second place, followed by Northwestern and Dartmouth. In Europe, IMD is number 1, followed by INSEAD, IESE Business School, London Business School, and SDA Bocconi. And Matt, we always love getting those rankings. I always look for Darden at the University of Virginia first. That came in at number 9 this year.
Yeah, absolutely. I think a lot of people pay very close attention to this, especially analysts on the street finishing up a 2-year program looking to get back into school. And it's really an important story for Business Week, and I recommend all of our viewers and listeners go straight to Bloomberg.com and check out that Business Week story.
We certainly will get more perspective there. Also, fascinating story that Kailey just went through about the UK government considering removing the cap on banker bonuses.
Yeah,
just
that's
as we're
huge.
talking about times getting a little bit tougher for bankers in terms of those bonuses. So maybe the cap wouldn't have been maybe needed anyway. But I wonder also how that goes down with the new voters for the Conservative Party who were brought on board by Boris Johnson, who previously voted Labour, more left-leaning. What would they make of this post-Brexit freedom being expressed by the UK government? Right, more on that, no doubt, another time. Coming up on the programme, Europe introduces a raft of changes to tackle its energy crisis. We will talk to the Italian Minister, Elena Bonetti. She'll weigh in on that crisis. Also talk to us about population and family matters around Europe, a big talking point heading into the Italian election. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The clock's ticking. Negotiations to avert a nationwide rail strike in the United States continued overnight. The deadline is approaching. A tentative deal appears to have been reached. Which billionaire do you believe? Ray Dalio says that interest rates at 4.5% would cause stocks to plummet. But David Rubenstein says it's a good time for investors to jump back into equities. And crypto's most important highway just got a major upgrade. We'll tell you what changes to Ethereum mean for investors. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, after the excitement, in a negative sense, if you're long of stocks, of Tuesday, things look much calmer today. Got data out the US later on, of course.
Yeah, well, and I'm actually surprised that we're not seeing futures move a heck of a lot higher after that rail agreement was reached, because a strike would have been a really serious problem for the U.S. economy, a really serious problem for U.S. companies, and probably a serious problem for the stock market. Nonetheless, futures are just stuck at unch right now, so we're looking at just less than 1/10 of a 1% gain, now a little bit more. We do see investors willing to let go of the perceived safety of treasuries. Now you can see 3.5 basis points gain on the yield, but that as well is kind of stuck in a range that we saw set on Tuesday at 344. NYMEX crude also unchanged at 88.39. So really markets are doing very little, even when you look at crypto, notoriously volatile. Really no movement after the merge. And frankly, there wasn't much movement before the merge either. We see Bitcoin just holding at a $20,000 level and Ether holding at about $1,600. So it looks like investors are waiting for something to decide whether to go with Dalio's call of 20% further downside or Rubenstein's call of now is the time to be buying stocks. Kailey, what do you see in the pre-market?
Well, kind of what you're seeing at the higher level, which is that there's not that much going on. I was staring at my most function on the Bloomberg terminal today, like, give me something, because there really just isn't a lot of movement for individual equities. I did want to point out one that is related to that move in crypto. Coinbase, the big crypto exchange, is up about 1%. And as for the biggest movers I could really find this morning, at least in the larger cap space, they're only up about 2%. One of those being Netflix, which was also higher yesterday on a Wall Street Journal report that it's expecting 40 million subscribers for its ad-supported streaming service by the third quarter of 2023. It also received an upgrade at Evercore today, so that lifting the stock. And then you also have Wynn Resorts and Yum China higher. This is likely a China reopening story. Of course, Wynn Resorts exposed to Macau in particular, very dependent on it for revenue. So as you're seeing COVID restrictive measures being eased in places like Chengdu, that is giving a lift to those stocks, up about 2.2 and 2.8% respectively. So not massive moves, Anna, but still something to note.
Yeah, and not massive moves here in Europe either, Kailey. We've got European stocks just up by 0.2%. The banking sector doing much better than that, though, up by 1.7%. Higher interest rates seem to be playing out well there. We've got the French 5-year yield, an illustrator of that, so a bit more of a sell-off in those bond markets and yields going higher. We've seen it certainly at the short end of the US curve, a lot of focus on inversion, twos versus seemingly lots of other tenors on the Treasury curve. So a lot of conversation around inversion, and we see the banking sector at the moment, stocks in the banking sector moving higher. Shell is of interest on stock specifics, up by around 0.5% today. The energy business losing its CEO, Ben Van Beurden, after many decades, Matt, at that business. And we've talked to him many times through all kinds of crises and the building up of Shell with the purchase of BG Group that really expanded the gas portfolio of this business. We talked to him many times over the years. He is stepping away, leaving the company with the person who used to run the gas section of the business, which apparently, according to analysts, seems to make sense.
Yeah, having driven Shell's business much more towards a zero emissions operation. At least they want to go that direction and continue until they hit that goal at 2050. Speaking of hitting a goal, one has been achieved in crypto. It's the most important switch that we've seen for any major cryptocurrency. Ethereum completed the merge, a software upgrade. The blockchain network completed crypto's biggest and most ambitious software upgrade to date. We spoke with Ethereum co-founder Joseph Lubin earlier this week.
We think it'll be enormously impactful, but it'll also be very likely nothing, in the sense that there's no disruption that's going to be experienced by end users. There's virtually no disruption that's being experienced by software developers. It'll be as smooth as if your iPhone or your laptop has upgraded its operating system automatically overnight.
Joseph Lubin there, co-founder of Ethereum, speaking with Bloomberg on Tuesday. Now, it is really the most important commercial cryptocurrency because of the many different use cases, not just a store of value like the original Bitcoin. Justin Drake joins us right now, researcher at Ethereum, to explain the merge. I mean, Justin, if you could explain what's happened, the shift from proof of work to proof of stake to someone to whom those phrases mean nothing, which is, I guess, most people in the world. Very simply, how would you put it?
Right. So Ethereum is a settlement layer for the Internet of Value. And the way that the security works is through what's called a consensus engine. And what we've done today is we've upgraded the engine. We've made a massive upgrade. And you can think of it like upgrading the engine of a car. We've gone from gasoline to electric, and the properties of this new engine are really, really outstanding relative to the previous engine. And we've done this switch of engine while the car was running, and it all went smoothly.
So the price action, which is virtually none, right? We're unchanged on Ether right now at $15.92. Bitcoin, just as a mile marker in terms of crypto, unchanged at 20,000 right now. Does that mean you've succeeded? You haven't caused any ripples in the system?
That's correct. It looks like the market was expecting success, and indeed we did deliver with success. One of the key features of this upgrade to the consensus engine is the dramatic reduction in so-called issuance. So we're going to have 10 times less ETH that is produced every single block, every single second. And so what that means is that there's going to be roughly $20 million less of sell pressure every single day. So even though we're not seeing any price action today, it's not like someone would come in and buy billions of dollars in one go. No, instead is sell pressure, which is being reduced by roughly $20 million per day.
Justin, you've said, I think, in the past that with what's happening with Ethereum right now, it's becoming a settlement layer of the internet, a low-level piece of infrastructure, which makes it sound very important, but not very exciting. Why is today so exciting?
It's exciting because you can build applications that are robust, that will live for decades and centuries, applications that can be trustlessly composed with each other. If you think, for example, of applications like Uber and Lyft and Airbnb, these are silos. Their competitive dynamics means that they don't compose well with each other. Imagine a world where, just like the early philosophy of the internet, everything's open, everything's composable with each other. And so what I expect is kind of this exponential innovation from this permissionless open innovation.
Well, just on the subject of innovation, or at least what upgrades could come moving forward, Justin, obviously, now that the merge is complete, you will likely immediately see the reduction in energy use. I believe Vitalik was quoting you on Twitter today that it will reduce worldwide electricity consumption by 0.2%, which is not insignificant considering this is just Ethereum that we're talking about. Yet there's also maybe the ability in the future for transaction times to be materially reduced, for this to become more scalable. How long is it going to be before we get the requisite upgrades to reach that level?
Right. So Ethereum today, as a settlement layer, only processes 10 transactions a second. That's the order of magnitude, which is definitely not enough to settle the whole Internet of Value. We need to get to 10 million transactions per second. The good news is that we have 3 100x improvements that are coming. The first one is what's called rollups. Is this idea that you only put data on chain, not the execution. And that's going to give us 100x. There's projects like Optimism and Arbitrum, and you may have heard of ZK rollups and optimistic rollups. Anyway, the next big 100x is called sharding. Is this idea that as a consensus participant, I only have to do a fraction of the work. I only need to download a fraction of the data in order to provide the full security to Ethereum. And then the final 100x is this effectively Moore's law for bandwidth. Every single year, bandwidth increases roughly 50%, and we can leverage that over 10 years compounding to get another 100x in total bandwidth. And so the end game is 10 million transactions per second, which is enough for every single human on Earth to do 100 Ethereum transactions per day.
Yeah, I would definitely call that scale, Justin. Just final question, how worried are you about the risk of power concentration in a staking model?
Right. So one of the amazing properties of staking is that the barrier to entry is much, much, much lower than proof of work. You can come in with even just 1 Ether and join a pool and start profitably staking. The other amazing property is called fairness, which is that for every single unit of stake that you put forward, you have a fixed APR, regardless of how large you are. So if you're staking 1 million ETH or you're staking just 1 ETH, you still get the same APR. And this is dramatically different to proof of work, where there's these economies of scale, which means that only the very, very large players can be competitive. And that leads to centralization, which is not something that we have with proof of stake.
Justin, thanks so much for joining us. Justin Drake there, a researcher at Ethereum, talking to us about the merge. Tune in, by the way, to Bloomberg Crypto every Tuesday at 1 p.m. New York time. That's our weekly show. It covers the people, transactions, and technology shaping the world of decentralized finance. That's where we heard from Joseph Lubin this week. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Frontier Airlines CEO Barry Biffle. That's at 10:30 a.m. New York time, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Let's talk about the European energy situation. The European Commission has proposed to member states a raft of regulatory changes to alleviate the liquidity squeeze in the energy sector. This as the continent ramps up support to industries and consumers affected by Russia's throttling of gas supplies. Let's get to Bloomberg's Maria Tadeo. She spoke to Kadri Simpson, EU Energy Commissioner, yesterday.
The design of this package is extraordinary. So this is an emergency intervention package, temporary package, but we use like special article in our treaty. And that means that member states will be able to find agreement very fast. I truly hope, and I saw a willingness among our ministers that they will support the measures that we propose today. And that actually helps them to support their consumers, and also to avoid situations where we will have blackouts or need for curtailment.
Let's talk more about this issue right now with Maria Tadeo, our European correspondent. She joins us from Paris. Maria?
Well, Matt, what an interview. I think to me, the key takeaway now overall, when you look at the situation in Europe, is that this is a continent that is prepping itself for a war economy. When you talk about demand that needs to go down, you talk about binding targets, you talk about a solidarity contribution, which is essentially a tax, and you say sanctions are not going to be changed because we have to help Ukraine, and you take a political stance on that. To me, this is a war that is now, or essentially an economy that's heading into something that looks like a war machine, a war economy. Whether it succeeds, I think a lot of this will depend on the member states, which is why I'm so interested to see what your next guest, the Italian minister, will tell you, because Italy is a key country exposed to Russian gas, and there could be a very significant change of government there.
All right, Bloomberg's Maria Tadeo teeing us up perfectly. Thank you so much for your reporting from Paris. And as she said, joining us now for more on the European energy story and the upcoming Italian elections is Elena Bonetti, Italian Minister for Equal Opportunities and Family. Minister, thank you so much for being here. When we think about equality, there's obviously many different forms: gender, racial, income inequality also, and especially for the lower end of the income spectrum, lower income families grappling with sky-high inflation and energy prices. What should Italy be doing to help support those people?
Good morning, and thank you for this opportunity. Yes, Italy is now ready for a new investment of more than 10 billion to help families and companies to face this terrible crisis coming from the increase of the price of the energy. But we are strongly convinced that the main strategy has to be an European strategy. So we are promoting the fact that Europe has to fix a price cap for the market to buy the gas, the natural gas. At the same time, the main goal we have is to get rid of the Russian dependence. Italy is ready to be completely free starting from the next year, but we are also ready to face an emergency if Russian gas is decreasing before this period. We are diversifying the buyer to buy the supplier to buy natural gas, and at the same time we are increasing renewable source of gas and renewable source of energy for our country. But it is clear that national policies are not sufficient to face this crisis. It is really, really urgent that Europe plays a crucial and common role to face this strategic and crucial moment for our economy.
Okay. Minister, do you then, given what you've just said, does Italy still hope that a price cap can be agreed at the European level? Because it seems as if there is not cross-European agreement on that subject.
Yes, I know that it is a difficult point, but we are working to obtain this point. We think that it is important to reduce the impact of this crisis on the economy and on the production, not only for Italy, but for the whole Europe. We know that there are countries that are not agreeing with our position, but Mario Draghi was the first to propose this solution in Europe, and I hope also that the new government will continue on this position, because it is not only the interest of Italy, it is really the interest of Europe.
Okay, so for any Italian minister, clearly energy a real focus right now. But I know for you, Minister, equal opportunities and family are really where you are focused. Can I take us there then? Because there's been a big global conversation about falling birth rates. And I want to ask you about the Italian experience. Birth rates in Italy running sub-replacement rate right now, well below 2.1, at around 1.3. What can Italy do to bring up the birth rate?
But I think that Italy played a crucial role in the last year to promote gender equality, not only in our country, but also in the international agenda. Let me recall you that during our presidency of the G20 presidency of the Italian government, we promoted the first ministerial conference on women's empowerment, because it is clear, in particular after the experience of the pandemic crisis, that women play and can play more and more a crucial role also in the Building Back Better program for the economy, for the finance, for society, for rights, not only for women, but for all. It is really a question that we must release all the talents and the competencies that women can play in our societies. And to achieve this goal, we must continue to promote gender equality, to promote equal salary, to promote gender equality in career and the labor market, but we have also to change the rule. Let me, for instance, quote an innovative instrument we introduced in Italy for the first time. We introduced the gender equality certificate for companies. And companies that will obtain this certificate will have benefits from the point of view of the taxes, but also in the public procurement rules. So this is really a way to incentive the investment of the labor market and the business companies and the business society towards the achievement of gender equality.
Minister, thank you very much. We thank you for your time. Elena Bonessi, the Italian Minister for Equal Opportunities and Family. Coming up on the programme, how to crisis-proof climate action. That conversation next. This is Bloomberg.
I will say that it's one of the happier moments of my climate work. I have two things that excite me about my climate work. One is when policy gets done well, and this is by far the biggest moment like that.
That was Microsoft co-founder Bill Gates. He is among the guests that will be featured in our new Bloomberg Green podcast, Zero, which is launching today. Joining us now is the host of that podcast, Akshat Rathi, Bloomberg Green senior reporter for climate. So Akshat, first, congrats on the launch of this podcast. I am super excited to listen to it. Just talk to us about what it's about and who you're going to be speaking with.
Yeah, thank you. Look, there's a ton happening in the world. I don't have to tell you. But we're going to have to deal with all that's happening while we have to tackle emissions. And that world of climate change and climate policy and how it collides with energy and politics and geopolitics, it's changing, and it's changing really rapidly. I've enjoyed listening to podcasts for a long time. I feel the conversational format is a way to understand a topic in a way that is detailed, that's gives you an understanding that is much more nuanced than just being able to read a news story here or there. And so on this podcast, we've got, as you heard, Bill Gates, but we've also got Chamath from Social Capital, who's getting into climate investing. We have the first climate minister of Canada, Catherine McKenna. We're going to have a novelist, an Indian novelist, Amitav Ghosh, who's written a lot about climate change and colonialism, and the list goes on. I'm really excited to share all this.
Chamath Palihapitiya?
Yes,
the
indeed.
Chamath?
The Chamath.
Will be interesting to hear what he has to say. You also spoke with Bryony Worthington, who is in the UK's House of Lords, about the crisis there, which is, I think, in terms of the Western developed world, the most acute that we're seeing right now. What did you take away from that?
It is stunning. I mean, the UK has been the country, the richest country to cut the most emissions in the world, 40% reduction since 1990. And now it's in a crisis with energy. It's got a new prime minister, a climate skeptic energy minister, and they want to obviously try and tackle this immediate crisis. So my question to Bryony Worthington, who was one of the authors of the Climate Change Act, was, will the government scrap the Climate Change Act or its climate goals in trying to deal with this short-term crisis?
Okay.
And she was an emphatic no.
Okay, don't tell us any more, or no one will listen to the podcast, Akshat, but this is a good trailer for it. Thank you very much for joining us. Akshat Rathi, Bloomberg Green, joining us to talk about the new podcast. You can catch new episodes of Bloomberg Green's Zero podcast every Thursday. That is it for Early Edition. More surveillance is ahead. They'll be hearing from Liz Ann Saunders of Charles Schwab, among others. This is Bloomberg.